officially live on YouTube for the Tuesday edition of the Not Your Average Investor Show. Today, we are talking about how great companies prepare for a recession by opening the kimono, showing the JWB 2023 business plan. I'm your host, Pablo Gonzalez. With me, as always, is the man that I like to call GC. Was that goosebumps? You got goosebumps?
Totally.
Is the man that I like to call GC because of his genius concepts, because he knows how to generate cash flows, because he's a great co-host, and because his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody.
And with us, as always, is our phenomenal community manager. We call her MTM because she brings us the moments that matters, and because her name is Madison the Magnificent. Say hello, Madison.
Hello, everybody.
All right. And I want to welcome you all to the show. This is we want questions. We want to get through it. I think that, GC and his infinite ability to talk a lot and over explain things. I think we're going to keep it concise.
I do nail that.
You do nail the over explanation of things. This is very much a community driven show, right? So if you're like watching live on Facebook, you're listening in the podcast, and you ever want to get in on the action and just, ask a couple questions, give old GC the old howdy doody over here, go to nyais.com, register, join us live on a Tuesday or Thursday at 12:30 and be part of what, GC?
The roll call, baby.
The roll call, baby. We got our boy, Danny Davis, coming in from Germany with a Guten Tag.
Love it.
Guten Tag, Germany. We've got the Duchess of the first family of the Not Your Average Investor Show community, Karen Jensen, checking in, saying good morning. We salute you.
Ooh,
we got to salute. We got to salute the whole first family, GC.
You're right. I'm sorry, Karen.
You're fine.
Please don't send me to the dungeon.
We got someone from the illustrious Hudson Valley of New York.
That would be Chris Gonzaga.
That would be Chris Gonzaga. Great day, everybody. We got Shannon Baker,
the touchdown maker.
Touchdown Baker, baby, checking in with us. Hello, everyone. We got our boy Pedro Nacianceno from Jersey checking in as he normally does. Let me put my phone on Do Not Disturb so I don't ruin this show. We got Dean Curry, the early bird.
The early bird. Is Dean Curry going to be the early bird for the next tour?
Is Dean Curry coming in? Dean, you coming in February?
He's got a reputation to uphold. You can't be the early bird if you don't show up.
Dean Curry, shots fired. We got our leadoff batter today checking in as well as usual.
Oh, that'd be John Henning.
John Henning, good afternoon.
Forgot.
We got Raul Tirado, who is also from the illustrious Hudson Valley of New York.
Wow.
Man, that place.
We are blowing up in the illustrious Hudson Valley.
Place gets more illustrious by the day.
It does.
We got our regulars, the second family of the Not Your Average Investor Show, Rosalind and Gary Riley checking in from Marietta, California. Good to have you back. Who else we got in here? We got Marie Rockoff is back from Arizona. Good morning. Working to close 2 properties.
All right, Marie.
Making moves. We got the ringmaster,
Drew Barnhill.
Drew Barnhill with a good afternoon, everybody. And now we got the patriarch and the matriarch checking in of the first family of the Not Your Average Investor Show community. We salute you. We got John Evans checking in, saying hello, everybody. Is John Evans a new name?
New name?
Is that a new name?
Yeah.
John,
welcome to the party, John.
Welcome to the party, John. Good to have you here, buddy. We got the mountain man,
Bill Green.
From the mountains of Colorado. Good to have you, Bill Green. We got Sergio Prieto in the house.
Go Gators.
Go Gators. We got David Blattner saying the detailed explanations from Gregg are very illuminating and helpful.
You know what? Detailed explanations, the fact that I talk over and over excessively, at least there's one person out there that appreciates it.
It's true. At least one person appreciates it. We got Gerard Wendling checking in. Howdy doody, people. Howdy doody, Gerard. Good to have you. I hope that sticks, man.
Maybe.
We got the man that everybody knows, Gregg. You know who that is?
Noah Randari.
Noah Randari checking in from California. And we got Hervé from Jersey saying, what up, JWB fam? What up, Hervé? Good to have you back in the house. And we got Leslie Wilson, who is still in sunny but windy Cabo. Leslie,
love that.
Those pics on Facebook, but hey, it looks so nice out there. I see you drinking like a Paloma. She was drinking which is a Mexican, it's a tequila cocktail.
Ooh, I like it.
Looks like she's having a good time.
Enjoy yourself.
Not gonna lie, I want to party in Cabo with Leslie.
Mm-hmm.
And we got somebody with that checked in from the text, right? If you check in with a text reminder, you are defaulted to not your average guest. You can change that in the settings of the participants so we know where you are. And you're checking in saying, hello, JWB family, hello to you. And we got Bill Oxley checking in with a happy new year, JWB. Bill, first show of the year.
Love it.
Made it
That's
in
awesome.
January. Made it in January. You're
there
good.
We go.
You're good. January has like 3 months inside of it. You know that, right?
Yeah. Okay.
Doesn't it always feel super long?
Yeah, I guess.
But you know what's coming right up in February?
What's that? February.
The Not Your Average Investor, Not Your Average Investment meetup and tour. GC, why don't you tell everybody about what we got coming up in February?
Well, we have an incredible opportunity to see all of you, for you all to come and see your friends, to come and meet JWB. But not just that, you get the opportunity to actually see a JWB investment property. If you're one of those folks who have been tuning into the show or have talked to my team, but maybe you live in a different part of the country and you're like, you know what? I think I'd really like an opportunity to come down, get to meet JWB, see Jacksonville, actually go and see a JWB turnkey property. Well, this is your opportunity. This is going to be a really hands-on event. And we're going to be inviting, of course, all of our friends from the Not Your Average Investor community. So it's not just meeting the JWB team. It's not seeing your friends, but you're going to be able to see the success stories that are within our community here. We're going to have a panel of our Not Your Average Investors who are going to be sharing their stories. So if you want to come and see it in real life, folks that are enjoying the fruits of a different type of investment strategy, going to meet those folks. And we're going to have a ball. So it's going to be Saturday, February 25th. It's going to be an all-day event. We're going to start early and take a bus tour to go to the couple of JWB properties, do a live property of the week, which will be super fun. We've got lunch included for everybody. We've got a happy hour that we're going to be doing. We're going to do a downtown tour. So you're going to see what it's like to kind of hitch your wagon to a downtown that is in the middle of a revitalization. We'll talk through about how that can help supercharge your returns as well. And all that for $39. So it's an incredible opportunity. I hope you all take us up on it. If you're interested and you'd like to sign up, you can go to jwbrealestate.com/tour, I believe. Right, Madison? jwbrealestate.com/tour. You can register. We're going to limit this thing. Pablo and I we were talking about it this morning. We really want to limit this to one bus size. I don't know exactly what number that is, but we really want to make sure that there's one bus so that we can just have a great experience for everybody.
Spend as much time together as possible, essentially, right? The last one was awesome. It was a big tour, but having to split up into two different buses just created FOMO the whole time of like, you're in one bus, I'm on the other. We like to do the two-man show all the time.
There we go.
We want to stay in one bus.
I don't like to be too far away from you.
GC, you forgot one big thing.
What did I forget?
You get to get the heck out of the cold weather and come to Florida in the middle of February.
True. Pablo and I are going to be surfing on Sunday, by the way. If you want to go to a place where you can actually surf in January, come on down and hang out with us. We'll be talking howdy doody time. It'll be great.
Howdy doody time. Like GC said, you're going to show up. We're going to have some education for you. You're going to have a panel to ask other investors what their real life experience is. We're going to do a live POTW, right? A property of the week on a property of the week. You get to see it, look, touch it, blah, 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 blah. Lunch together, downtown tour, happy hour, great weather, good friends, one bus. The whole time. It's going to be awesome.
Game on.
All right, game on. So now GC, let's get into it, man. At least Dean Curry says, at least I was on the cool bus. Indeed.
Always on the cool bus.
Always on the cool bus, Dean Curry. All right, GC. So let's talk about, this is the business development plan. You know, JWB, I talk about it all the time. You got these like Tuesday morning meetings where you bring you have over 100 people now, right?
I think we're at 98 right now. We're close. Got a few job openings on the board, so we'll be there soon.
Yeah, and Pablo talk, that's over 100 people.
There we go. She's really good on the big picture. The details, maybe not so much.
Close to 100 people these days. You have these amazing weekly meetings where you bring everybody on the same page. This is the reason why when you talk to anybody at JWB, you have a very uniform experience. It's this like chain of communication and dissemination of information and being all on one mission with similar core values that I really love. And to start the year, you do a State of the Union, right? You share the business plan with the company, right? That in itself is revolutionary. The idea that you get everybody on board, everybody knows the business plan, everybody rowing in one direction. We're going to take it up a notch, and we're not just going to share it with the company. You're going to share this business plan that you presented to your team to our community, to our Not Your Average investors, because you're not average. So we're not going to treat you that way, right? So start. What is it?
Well, I guess this is my time.
This is your time to shine, buddy.
Yeah, I think this whole business planning thing started for us back really September of last year. We spend, call it a month, 2 months preparing for business planning. We actually met in early November of this year between my business partners and I, and we actually built this business plan. And from that point until we announced it to the team roughly a week or so ago, we've been having those internal conversations with every person on our team for everybody to understand where we are as a business, where we're going, and what their role is and why it matters. Mm-hmm. And so we go through that rhythm. And I think that is, that that rhythm of preparing to plan, distributing the information to the people who need to know it and the why behind it is the real value of how this organization is run very well and starts the year on such a positive foot. And then, we'll get together as a team and we share the big picture as well with everybody together. So everybody has a voice, everybody can ask questions, all that good stuff. So what I'm sharing with you guys today is really the last step on this journey, which has been, call it a 4 or 5 month journey for us now. And it's one that I'm so excited that we get the opportunity to take this step. If you think 3-4 years ago, it just kind of stopped internally, but now we have this community here. So we can share it with all of you, many of you who are JWB clients, and you want to know where we are putting our focus in 2023. And if I think about 2 more reasons why I think I'm so glad that you all are tuning in right now, and I think you're going to get a lot of value out of it is, number one, I remember when I was a new business owner, or a new investor too. And, I can think about it from both angles, but if I was a new business owner, I wanted to understand how the businesses who had been in business for, call it 10, 15, 20 years, the ones who had, been blessed to win some awards, who, had, call it close to $200 million in revenue, like, how do they do it? Right.
Yep.
So I think if anybody is in that boat where maybe you're a newer entrepreneur, maybe you're just starting to have some success as an entrepreneur and you're wondering, what can I do? What can I bring back to my organization? I think you're going to get a lot of value out of this. We'll talk a lot about not just the numbers, but the why behind what we're doing. And then, we got this thing coming up, like this impending recession. And I think there will be more eyes and ears tuned in because we want to see what does that mean? What does that mean for JWB? What does that mean for real estate in Jacksonville? All that good stuff. We're going to get to kind of dive into that today.
I love it, man. I'm glad that you brought that up yourself. I was going to bring it up if not. And it's the value that I've gotten to receive from like doing this show, seeing behind the scenes at JWB for myself personally. Not only has it greatly informed the way that I invest, right? I would not be a real estate investor had I not been in this room for the last 3 years. I wouldn't have a portfolio of homes right now. But it also has opened up my eyes to how you run a business that lands on fastest growing companies list, that wins best places to work every year, that wins Ernst Young Entrepreneur of the Year awards. And this concept of business planning, I get to experience it for, the 3-4 months, because when we're running in the mornings, starting around November, it's all about business planning.
Right. Yeah.
And when we're a partner to JWB and we're asking for resources, I know during that month, it's like, I can't make a lot of asks because everybody's just really keyed in on business planning. And I've seen this thing grow, but more importantly, through the stories that you've told me, I understand that this business plan is the compounding interest of many business plans that you have been putting together and the amount of effort that you put into it. And I remember when we first started talking about JWB writing the book, right? About like JWB and like investing in rental properties. I was like, I don't know if you need to write a rental property investing book. GC, I think like the book of the wisdom that comes out of all this stuff is the value of long-term thinking.
Right.
And I think that that's what we're going to see here. We're going to see this like continued compounding interest of investment in long-term thinking. And I'm really pumped for everybody to like see this piece.
Well, let's do it then.
Let's do it, man. So how are you approaching this year? What is the theme of the year, or like, what are you thinking here?
I just think, as I was reflecting before our chat here today, a term kind of came to me, and I think it's going to kind of stick, right? I hope it kind of sticks with our community here. And I think as you start to look at what companies are going to be successful going into 2023, going into maybe different times, maybe, an impending recession, I think this term really matters. It's the companies that can proactively pivot will be the companies that do really well in 2023, going into a recession, right? Because not all pivoting is equal, right? Pivoting is a business term that is used around a lot, right? Oh, we're just going to make a pivot. We're going to make a pivot. We're going to make a pivot. There is a difference between proactive pivoting and reactive pivoting. Proactive pivoting is looking at what the market is throwing at you, looking at what the strengths and weaknesses of your team and what your competitive advantages are in your marketplace, and understanding and seeing all that together and saying, you know what? We've got this source of revenue, or we've got this business opportunity that we've built out over here. Foundationally, it's already been built. maybe we can just kind of tick that lever up a little bit there, right? And so a proactive pivot would be like, okay, cool. Let's pull that lever a little bit more to make sure that we kind of give a few more resources and get a little bit more out of this business unit. A reactive pivot is where you're like, okay, well, a big source of my income is no longer going to be there in 2023. Let's figure out how to solve that. Let's start something brand new. And, that typically doesn't work out, but that is the place that a lot of people are going to find themselves in 2023 in many businesses, and especially in real estate. And I think especially in turnkey real estate as well. People don't really think about this, but when I started to invest, there was this whole idea of turnkey real estate back in 2006. It was not a thing. Nobody ever talked about turnkey real estate. We had to inform clients so much in the beginning of what we were trying to create. And then over the last, called 17 years now, people have rushed into this asset class, and there's a turnkey operator on every corner now. Well, I think those who are reactively pivoting in 2023 are going to pivot their way out of this business and maybe out of business overall. I don't know. But when you're thinking about where you want to go in a recession and even beyond a recession, I think this business plan for us is not so different than business plans we've built in the past, even though there are changes coming up in the marketplace. You want to be on the side of proactive pivoting rather than reactive.
Leslie Wilson's in on the term. Says proactively pivot. I like that. We should get t-shirts with that on them and ask me how on the front.
Love it. Let's do it.
I like it. GC, when I think of what you're talking about, a proactive pivot versus a reactive pivot, I think of a reactive pivot as like a scarcity move.
Yeah.
Right? Like something happens in the market that you didn't foresee and you weren't fully prepared for, and you're forced to do something. You're forced to say, oh, okay, well, this thing that was my profit puppy isn't there right now. So I'm going to go throw a Hail Mary this way. And if that Hail Mary doesn't work, maybe I'm going to throw another deep one over there.
Right.
And you start trying stuff. And that to me inevitably leads to at the very least, an inconsistent experience for a team, for the clientele, things like that. When I think of a proactive pivot, I think of a person driving a cruise ship that's just at the helm and is just making a smooth turn with it, because you already had your waypoints and you had your things. And what I really think of when it comes to business is this idea that, I always kind of love to kind of compare what y'all do to Jim Collins's books, right? And that like the ping pong to cannonballs concept, that when you are going to pivot, you've already thought enough to like test a concept enough times to know that when you're going to ratchet something up, it's already proven.
100%.
And therefore you can control that kind of like experience for the team and for the client.
Yeah. I'll give you just a real world example.
Yeah.
For when we are building our business plan, there is a really high threshold for us between the four of us before we're going to put some income on the business plan. Right. And so if, I think in most businesses, even if you have a really good idea, you're like, oh, well, listen, I'll create some income. If it's the first time you're doing it or whatever, I'll create some income from it. Let me put it in the business plan. Maybe it'll take us 3 months to figure it out, or 6 months to figure it out, or 9 months or whatnot. And companies will put that on their business plan as an income. Not for us. For us to actually count this as income in our business plan, it has to be proven and repeatable, and it has to be a great experience for the client, and it has to be a great experience for the team, and we have to be able to count on it. There are many sources of income that we have that we will never count on for when we're putting a business plan together. And I think that is a really sound, solid approach. The first time you're doing something, it should, I won't say always and nevers, we don't count that. The first time that we're creating income from something, that is never going to make it on that year's business plan. Got
it. Yeah. I'm actually getting like flashbacks to me trying to copy you guys and put together my business plan and telling you all the different things that I'm throwing in there. You're like,
yeah, remember that?
Count on like an extra $100,000 for that you've only made like 10 grand on. Yeah. Okay. So it's all coming back to me. I wish we would have had this call sooner. GC, give me an example of ping pongs that you have been firing in the past that are now going to culminate when we show everybody the numbers and the things that are happening.
There have been some very big moves that JWB has made in the background. And, those moves are going to be paying off with the numbers that we're going to show you here. But, I'll think of a few examples. I think about back in 2011 when we started to build new construction, do the build to rent, which is now a phenomenon. And now you've got private equity and builders that are all coming together to do build to rent. Well, in 2011, we were the first ones to do it. We were pioneering that space. And once we figured that out, and once the Wall Street Journal wrote about us and put us on the front page, we really knew that we had an opportunity to create a great runway of inventory for clients. We knew that returns could be fantastic for clients, that the resident experience could be great. And for JWB, we would win as well. So, but we didn't stop there. We didn't just say, okay, you know what, let me just build some new construction homes for that year, and then we'll see next year and see next year. What JWB did is we began stockpiling, I'll tell you, as many lots as we possibly could once we knew that this was something we wanted to dig our heels into. And we started to stockpile. So what that means is, in years where we sold 200 or 300 or 350 homes, we were buying 500, 600, 700 lots those years. And we did this consistently for over a decade to make sure that we had inventory at a time like now when inventory is undersupplied, we would be in a position of strength. So that decision to do that allows us to proactively pivot, which you guys will see in the business plan here.
Yeah, that makes me think of in the pandemic, 2020, 2021, everybody was on a waiting list. JWB never was, right? Because you were stockpiling that land.
That's true.
And, you were preparing both for a moment of scarcity and also for a moment of like, when land costs start becoming, like going up, you still get to control the experience for the investor. In my world, it reminds me of the story that you told me about of your partner, Alex. Was like 10 years ago. It blew my mind when he told me this story, but to me, it's a perfect proactive pivot thing where he just kind of like came to you guys during business planning and was like, hey guys, here's my plan. I'm going to go out and network people in Jacksonville, and I'm going to build a bunch of connections and build a bunch of influence in downtown Jacksonville. Because at some point in this next market cycle, downtown Jacksonville is going to be a thing. And I want to be at the center of every single conversation when that happens so that we can move on it. And you guys were kind of like,
yeah, you know what his business plan, his strategy was?
But,
I'm strategic, right? I'm prepared. I've got the numbers to support my business partners. We all are, except there's this one business partner who also loves the numbers, but his business strategy here for his big pitch was, I'm going to make people happy.
I get it.
I get it. I'm going to make people happy over and over and over again. We're not going to see any source of revenue for this for a long time because I'm not going to go and make people happy and tell them they have to pay me. I'm just literally going to make influential people happy in Jacksonville. Yeah. And I'm going to do this for an undetermined amount of time. And I really want you guys to buy into this because I think this is going to be a game changer for us. And, call us whatever, smart or crazy. We did buy into that and it has paid off really well for clients. For JWB, it's, now 17 years into business. It is the reason that we have some of these significant opportunities that other people in our space just will never have.
Yeah. 19 city blocks in downtown.
There you go.
Downtown Jacksonville is what you call a significant opportunity. All right, man. Okay. So I think we can talk through the other proactive pivots as we go on. Ken Maline's got a great question. What would the concept of a proactive pivot look like for the not your average investor? Can we frame this in an investor's life?
Yeah, I think that's a great question, Ken. And my first thought goes to those 3 points that we're talking about being successful in a recession, right? For a not your average investor, you got to be comfortable doing something that's different than the crowd. Right now, the crowd is just keeping their money in stocks and bonds. Maybe they're changing their asset allocation percentage a little bit more. Maybe they're putting more in bonds than they are in stocks because they're worried about it, but they're still in assets that are likely to lose, especially against inflation this year. That's what the average investor is doing. So I think for a not your average investor, I think an example of proactive pivoting is, number one, turning equity into income. Yep. Taking the money that you have in the stock market and turning that into income, like buying rental properties, or we even talked about paying down debt as a way to reduce expenses and things of that nature. So equity into income. I think, number two, what we have been talking about is focusing on capital preservation and, those assets that tend to perform more consistently over time in recessions and in non-recessionary times. So focus on those types of assets. And obviously rental properties is a clear winner there. And the third one is beating inflation. You got to focus on beating inflation. Don't just settle for bond returns that are lower than what the CPI is, the consumer price index, or other examples of you putting your money somewhere that you're going to earn less than what inflation is. So that's where I would go. to be a not your average investor.
The Dutch is checking and she says she paid off that credit card, right? That is a proactive pivot, right?
Love it.
Like turning equity into income. Ken also says, he suppose a proactive pivot example for a not your average investor could be doing a cash out loan or refi on an existing property and using the cash to purchase additional homes. And I would even up that a notch. I would say that I think of proactive pivots as the original story that you love to tell when I first came on of Jim and Stacy, right? Like Jim and Stacy had what they wanted to do was sail around. They wanted to do this like epic sailing adventure.
Right.
So they created an investment strategy that gave them cash flow and options at a certain moment. And when that certain moment hit and that sailing adventure wasn't feasible because they were invested in an asset that accrued equity over time, increased its cash flow over time, and then had all these like other levers of being able to like cash out and use that for things, they were able to quickly change their plans, right? That's a very different story than that person with that ING number that gets to a certain, like a certain amount that is then in the stock market. And now the stock market takes a dip and all of a sudden you got to wait 3 more years to retire or you got to like change your income level, right? Like I think the whole exercise of investing in assets that pay you tomorrow and pay you 5 ways and pay for themselves every single month on the way to paying that cash flow tomorrow is a proactive pivot.
Love it.
Yeah. Cool.
I love it.
All right, GC, let's get into some of these numbers, man. What do you want to start with?
Let's talk about home sales.
Okay. We talk, profit puppies, right? So Dean Curry's got a question. Dean, we're going to get to this. This is a more holistic question. We'll get to this once we finish this. But so we talked about profit puppies, right? Home sales is kind of like the big profit driver in your business. So let's talk about it.
Yeah. So in 2022, we sold 423 properties. And as you can see here in 2023, we're expecting to sell 348. Now, for those of you who've been keeping track at home, how many times has JWB come to you with a business plan to sell less properties the next year than the one they did before?
I mean, I've only been around for 3 years, but this is the first time.
First time. I think it's the first time in our company history that we've done this.
Okay.
So what do you think's going on there?
Man, I have to assume that most people, right? Like, I'll tie this in a second, but like, I feel like the average investor is right now not in a proactive pivot mode, right? The average investor is more likely listening to the news and, like thinking of what's happening, and their behavior is to go into scarcity mode, put money under a mattress, like stay with the things that everybody has already told them. And therefore selling a alternative investment is going to be harder to sell to people outside of the educated circle that we have created.
Sure.
And, like people that our Not Your Average Investor Show community knows and can vouch for. It's going to be much harder to sell to anybody else coming off the street that doesn't have this experience and hasn't been like taught this, which makes me think another proactive pivot for you all was deciding to invest in an education-based community 3 years ago, so that when this moment happens, the amount of evangelists and the amount of people that truly understand this asset class and can vouch for it have exponentially increased.
Pablo's proactive pivot. This is what we did when we were at Coop 303. There we go.
Yeah.
No, I think you're 100% right. I mean, let's talk about this, right? We think that we are going to sell less properties in 2023 than 2022. That's obviously not how we normally roll, right? But we have to take a look at what is going on in the overall marketplace. And I think that we need to carve out some space that two things can be correct at the same time, right? That number one, real estate and rental property specifically can be a better asset class to invest in compared to other alternatives. That can be true, which we believe to be true here. And at the same time, there is less demand for the product.
Yeah, that makes perfect sense.
And the way that is possible is where not everybody gets it.
Yep.
And that's really what you're seeing here. Right here, you're seeing the big guys. Let's call it Wall Street. Let's call it private equity firms, hedge funds, builders. This is the first time in history that they are partnering up, literally putting tens of billions of dollars towards this asset class of building single family rental homes to hold on to for a long period of time, right? That's the first time you've got this huge demand coming from there. But then you talk to average investors out there and they're reading the news and they're worried that this is going to be another 2008 market crash. They're not paying attention to months of inventory. They're just not seeing it with perspective. And it's really hard to communicate to those folks. And then we've got this beautiful little hole in the internet that we've created out here and with our clients and in IRL, right? And with our tour coming up too. And we think differently here. And we understand that this asset class pays you 5 ways and has so many advantages compared to the other asset classes right now. So there is a, I don't know, is it bifurcation? I think bifurcation, or there's different people that get it here.
Yep.
And I think that's what you're seeing. But overall, there is too much on the line for us to just be blind and say that we're going to be able to overcome the massive negative, headwinds that are facing real estate right now. And for us to assume that we can sell more than we did last year, I think there's too much risk there, because when we put a business plan together, it's not just, serving the 100 or so teammates that are here locally. It's literally the thousands of investors out there. Mm-hmm. And then it's probably closer to 10,000 people that depend on our business in one way, shape, or form, contractors, vendors, other folks that are a part of our network, right? So we got to nail this. And I just think that this is the right approach. We think this is the right approach. And listen, we're still going to sell 350 homes, right? We love that. So that's how we're thinking about home sales overall.
Okay. All right, man. So is the overall kind of like demand decrease for turnkey properties based on, Wall Street sticking around, not your average investor sticking around, Joe Q Public, that's going to knock it down. Looks like, what is that? 50, yeah, like 1/6.
70. Yeah.
Yeah. Like 1/6 of whatever that is, like
carry the 9 or
like
something like that.
16%, something like that.
Yeah.
So you think that that's the reduction in turnkey kind of like demand?
So a couple things, I think overall, we don't know what the Fed's going to do. If we go back to the last quarterly update that we did, we said the biggest influence on home sales next year outside of JWB and within JWB will be interest rates. Mm-hmm. If interest rates continue to go up like they have, that's going to be a real challenge for home sales overall. And it's a challenge for, the internal rate of returns for our properties as well. So I think there's, that's the bigger thing. We're going cautiously into what the Fed does when we put that number out there. But to answer your question, no, not all of these sales are actually the same kind of percentage of sales that we've had in the past. I wanted to make sure I brought this up for you guys. One thing that we don't talk about enough in this show, I don't even think our clients are know of this, but the concept of investing in a growth market like Jacksonville is so different than investing in a market in the Midwest, where you don't have a lot of what we call retail sales happening in the neighborhoods that you're investing in a lot of those Midwest markets. Here in Jacksonville, the neighborhoods that you're investing in, while you may choose to sell to an investor if you do want to liquidate your home, you also have the opportunity to sell it on the open market to a retail buyer. And, that's been there forever, right? That is an opportunity for you to liquidate, of course, maximize your return on investment. But I wanted to give you a stat to show you that this is really possible. JWB last year, 13% of our home sales were retail sales. So we actually sell properties retail on the open market, and people that are not technically clients of ours are buying these to live in, right? So that's still a significant part of our business, 13%. This year, we see retail being a huge opportunity. Retail is going to be over 50% of our sales.
Oh, wow.
This year.
Okay.
Because people still are moving to Jacksonville. Population is growing, right? In many of our neighborhoods, you're still able to buy a home, even with interest rates the way they are right now. You're still able to buy a home and pay less than you would in rent. And so there is still significant demand for people buying owner-occupant homes. And so the breakdown of how we get to those home sales will be much more retail-driven this year than we saw last year. And hopefully that gives you all maybe some insight and some confidence that, listen, you're not just buying this thing and you're having an asset that's going to produce these 5 profit centers, but you're not going to be able to sell to an owner-occupant. You can. Many of our clients already do. Yeah. And we expect that to be able to continue.
Yeah, we don't talk about that enough, right? Like the high floor of the asset class based on being in a growth market and based on yes, it is not as liquid as stocks, which actually makes it more stable, but it is liquid enough that you're going to be able to find somebody that wants to move into this house because this is a place where a bunch of people are moving, right? I think that's interesting. I also feel like if I'm thinking about that ratio and how it's moving right now, is that also, am I thinking wrong in thinking that you guys are turning assets into income that way?
Oh, 100%. We 100% are turning assets, equities into income.
Equity into income. Yeah.
Equity and assets, equity, it's the same thing in a sense, right?
Yeah.
We have purchased a lot of land,
Mhm.
which is we own that asset, right? And then that's got equity in that piece of land, and we're taking that and we're putting it into production, and we're doing that at a really high rate. In fact, we'll get into that more and more as we go through the business plan here.
Okay, let's talk some more. So that is JWB's Profit Puppy, but y'all make revenue in other ways, right? Like one of them is your property management company as well. Tell me about this.
Yeah. So, if your home sales are going down, that would mean that your revenue from home sales is going down too. And, that's not just JWB saying we're just going to tuck our tail in between our legs and say that the market is, we're the victim of the market here. No, what you're starting to see is these proactive pivots that we've been talking about starting to take shape and take form. And when we start to look at this one here, properties under management, this is one that has been growing and it's been very strategic. In 2018, we managed about 1,600 homes for clients, for JWB clients, and we were very restrictive. We would not manage a home for somebody who didn't purchase a home from us. We said no to everybody. But in 2018, we said, you know what, there is going to be a time when we are going to see our property management company, the demand for those services drastically increase. And with property management, it is counter-cyclical, which means that when the real estate market is on fire and things are selling like hotcakes, it's tougher to grow your property management businesses for most folks out there. People are not looking to property management to rent out their house nearly as much. But as the market starts to normalize like it is right now, especially with the fear that the media is creating about the real estate market, we are taking on the services, and our properties under management number has been growing at an incredible rate from last year to this year. So in 2018, we opened the doors for our JWB to serve all clients here in Jacksonville. We are restrictive about the types of properties we manage to a certain extent, but you don't only have to buy properties from JWB anymore. And that was done very strategically for a moment like this in 2023. And in 2018, we went to our team. We said, team, we're gonna have 5,000 properties under management before too long. And so it is really cool. As we ended the year last year, we had 4,911 properties. We are going to be just over 5,000 here pretty soon, and we'll be at about 5,200 by the end of 2023.
When I think of the significance of this as first of all, super impressive proactive pivot, right? Like this idea of just like, again, testing it for your turnkey and then saying, all right, this is something that we can expand, grow market share. And as a business operator, what I see here is create recurring revenue.
Oh, yeah.
Right? Like recurring revenue for a business provides stability, provides the ability to forecast, provides the ability to take different, like other types of bets that like is kind of the Shangri-La of why everybody wants to be a software company. It's because of the recurring revenue, and why software companies haven't seen valuations is because of recurring revenue, right? 100%. So like this idea of ramping up your recurring revenue arm so quickly and so effectively, I think is a super, super impressive proactive pivot. And, it is no surprise to me that you can be so cool, calm, and collected and make these proactive decisions when you know that you are growing this side of the business and doing it well.
It's, people ask me, well, what keeps you up late at night? Or what, I'll tell you, having that type of revenue come in from 5,000 properties that we manage every single month, that type of revenue, it's not just the dollar figure, it's the type of revenue. Yep. It's sticky, right? Yep, sticky. It is. It is there. It's over thousands of clients, right? That type of revenue just gives you so much confidence as a business owner. It gives you confidence to make the right decision. It gives your team confidence. So yeah, that was one of our all-time greatest proactive pivots.
Yeah, that's awesome, man. And you mentioned, I think Madison mentioned it recently, that you give out you pay out $4.6 million a month to residents, right? So like not to residents,
owners. That wouldn't be a very good business of the property management company if we did that.
To the investors that own these properties, right? That's a significant source of revenue, that you are just doling out to investors.
That's cool.
Yeah,
we all think, wow, how cool would that be to collect 4.6 million in income each month. And then you're like, oh my goodness, what a responsibility. Yeah. Our accounting team does an incredible job to make sure that not only do we collect that, but that we, get that to you as an owner and help you enjoy that passive income.
Yeah. Awesome, man. All right. So let's talk about other sources of revenue. GC, you had an interesting one here. That's kind of a new one that I haven't really seen before.
Yeah. We haven't talked about it.
Mm-hmm.
This is the first time I'm really kind of going into depth of what we have done on the commercial development side. But, I've talked a lot about how the big guys and the big girls on Wall Street are partnering with home builders and all that good stuff because they get it. But what that is doing is creating an opportunity for aggregators. And aggregators is a real estate firm that is probably a medium-sized real estate firm that is, aggregating inventory. And that's, some people call us an aggregator if you're in the Wall Street space, right? So we would be an aggregator. So aggregators and those who can supply Wall Street or the builders with projects that can turn into these build to rent developments. Mm-hmm. And this has been something that we have been working through for a number of years now. I think we first started to go down this path. Well, we first started to aggregate the land. Geez, I don't know, 3, 5, 7 years ago. I don't know. We've had some of these tracts of land for quite some time. And probably about 3 years ago, we said, you know what, within our relationships in the space, how can we be create a service or a product or be a service provider for some of the big guys out there while still maintaining what we love to do, which is to serve you all, individual investors. And so we've created this space where we buy larger tracts of land that will become build to rent communities. We then do the horizontal development for the end institution that is buying it. And we then do the vertical construction, actually building up the land. We do the management on that as well for the institution. And so we can basically be this turnkey operation for the end institution who loves to invest in this asset class like we've talked about. And so that's what we have been doing over the last few years. Had its ups and downs. There's some bumps along the way, learning a little bit of a brand new business model, which is why we don't talk a whole lot about it with you all as clients. It's just something we do, internally here. And last year we established a lot more confidence in it. We now have 4 projects that we are actively either under contract and performing for some of these institutions. And then we have a couple more that we're going to be selling as well. And so this has become a part of JWB. And you can see last year we generated $36,000 of income from it. That's funny. When you see an asterisk there, that's a JWB world record. So we're going to call that a JWB world record. You'll start to see more as we go through the slides here. But this year you can already see how this is going to have a significant ramp up with the projects that are already in production here. So we're expecting to generate about $2 million in revenue. And I just thought that was really cool for you guys to see what is done many years ago. This is not a brand new idea. This is not an internal shift for JWB that we're bringing that's brand new. This to us is going to be a ramp up, but it is normal business here within the walls of JWB.
When I think about my past life in the construction world and I see this thing, I just see such a massive opportunity, right? Like I see the idea of groups like the Related group from Miami that, like really blew up downtown Miami, coming here to Jacksonville and seeing this beautiful canvas of a place where they can develop these like really amazing things that they've already proven out in other cities, but also needing somebody that is totally vertically integrated inside the city, right? Just like us investors need this, the big commercial guy, the big guy that like knows what's underneath the ground, knows who put it there, knows who can change it, right? Like that has all the, that comes with the whole ecosystem of what it needs to like grab this thing and take it from like tract of land to something where they can put this like beautiful cash flowing asset that they know how to operate and build. It seems like a monster opportunity, man. Really cool. Are these like tract home developers? Are these high rises that are going up?
No, think new home communities. So this is that build to rent single family rental community that you are going to start seeing more and more probably in your local in your local market. You're going to definitely start to see those more and more here in Jacksonville. I know because we're building out 4 of them and there are others as well. So this is not high rise. It's single family homes like you would think that look like a normal subdivision, except they're all rental properties.
Wow. Very cool, man. Very cool. Awesome. So, all right. So those are the revenue sources, right? Revenue sources are selling homes, to which we just showed that it's going to go down a little bit. Product mix is going to, creep up more on the retail side on top of, as well as the turnkey stuff. You got the property management. That is your recurring revenue that you have been building up for a really, really long time to create this like very safe runway of operations. And your ping pong to cannonball this year was going from like tinkering on the land development side to now having a significant source of revenue on the in a major value prop that I assume you have a giant moat around here in Jacksonville on the revenue side. So now let's just talk about kind of business as usual in operations, right?
Yeah. So some of the stats here as we get into, especially property management, which we'll take a look at here, just mind blowing. When I put these stats together, sometimes I don't see them in, totality for the year, right? I'm seeing on a monthly basis. You start to think about just the activity that our team has accomplished here. I'm just so proud to be a part of this organization. In 2022, for new leases, we signed almost 1,300 new leases, over 100 a month. And this was while rents went up significantly. And oh, by the way, we ask our residents to sign 2 and 3 year leases. We don't just sign 1 year leases. So you see that asterisk there. That was a world record for JWB. And as we're going to 2023, we're going to ask that and just a little bit more. It's going to be over 1,300 is our goal for 2023 for our leasing team. And on the renewal side, again, not enough property management companies focus on renewals for you as a client, but that every time we get a renewal for you, think about that saving $6,000 to $7,000 of cost you don't have to spend. Well, we did that a record 1,358 times in 2022 for all of our clients there. So proud of our property management team for doing that. And guess what? We're going to ask a lot more about that in 2023. 1,665 renewals is the goal for 2023.
And what I like about that is seeing that renewals outpaces new leases, right? Like you are practicing what you preach in the sense of like the thing that drives ROI for an investor, the things that under promises and over delivers is your ability to drive renewals. And not only do you outpace renewals over new leases, but you are growing the delta between them.
Yeah. Well, we like that. As you start to manage 5,000 houses at one time and more than that, you're going to start to see this number have more and more of a delta in future years.
Yep. And then Lee had asked earlier in the Q&A, I had saved this for right now, what's new construction? What is renovations completed? Talk us through these numbers.
Yeah. So new construction, again, some massive wins here. It's funny, in Jacksonville, and I'm sure in other parts of the country, they have lists where they have the top, real estate companies and the top property management companies and the top builders. JWB is lucky enough to be on all of those lists. And I don't think we give enough credit to our construction team, but in 2022, they built 330 homes. 300, like as a builder, if you build 330 homes in a year, like you are on that list. You have a business in and of itself. Yeah. So incredible job there, obviously facing a lot of challenges, supply chain and all the like there. In 2023, you're going to see that number ramp up for JWB new construction. It's going to be 390 homes, new homes built, all the while completing the renovations that are out there for us to complete. In 2022, we completed 162 renovations. That number is a little bit misleading because for those who have followed with the show, I've been talking about a lack of supply, a lack of inventory out there, which is limiting our number of renovations that we can acquire and then, complete for our turnkey clients. Well, we had, out of those 162 properties, one was a condo conversion project that we've been working on, which is about 131 units, if I remember correctly. So a little bit misleading there for the number of renovations completed in 2022. When you think about really what the market is giving us as far as renovated properties to be able to purchase, really somewhere around that 50, 60 range is kind of what we are thinking. And so the goal for 2023 is to complete 50 renovations.
There you go, man. There you go. We got a Q&A here from Anonymous Attendee that is asking how frequent renovation is done on existing homes and what is the average cost of it?
How frequent renovations are done on existing homes and what is the average cost on it? Well, we do an initial renovation. Of course, when we acquire the property, then we renovate it to the JWB standard. And the average cost for us is somewhere around $40,000 every time that we do a renovation on a home.
There you go. And Denny Davis is asking, are you going to sell these condo conversions to investors or is that a different thing?
No, that's another thing that JWB is working on in the background that won't show up as income and for hopefully, sooner than later, but it's going to be a while before I think that shows up as income. But yeah, that doesn't even fit on the business plan anywhere and that won't be sold to clients.
Okay, let's keep talking about more of your construction operations here, which are massive.
Yeah, so I wanted to dive a little bit deeper. We talked about this proactive pivot and I gave you the example of JWB stockpiling all of this land. Well, we do this for you as a client to make sure you have a runway of existing inventory. And we do that for JWB to be in a position of strength. I wanted just to give you guys some insight into our runway of construction. Mm-hmm. So this is not tied to that previous number of 330 projects we finished in 2022. Mm-hmm. This is our runway of lots. And you can think that, the large majority of these will turn into turnkey rental properties for you all down the line. we have over 450 lots that are in the pre-construction phase. So that means that we haven't even gone in for permitting yet, or we are doing our due diligence on those lots. Those are lots that we own that are literally just sitting there waiting to be moved through the funnel at the right time. We have another almost 600 lots that are in the permitting stages. 600 lots in the permitting stages. Wow. And we are planning ahead, permitting those, making sure those will be ready to build when the time is right for you all. And then we have 321 projects that are actively being worked on right now, active homes being built at this moment for a total lot number of over 1,300. So this is the type of runway, that proactive pivot that we started to undertake back in, call it 2011. And since then, over a decade now, this is the runway that you all have as clients and that we have to make sure that we can, have assets to be able to sell to you.
And this is so impressive. So we always talk about these homes as like widgets, and we never talk about the fact that you're basically like a manufacturing machine, right? So like you've been talking about all this like proactive moves in order to be able to proactive pivot. And what I hear from you is essentially you have been stockpiling raw materials, right? And while building a factory, and now you've had all this raw materials, and now like all this inventory, all these materials are in the factory, on the conveyor belt, being cranked out, right? Like, and I just find it incredible to think of like, just, think about producing like 1,300 cars or 1,300 shirts.
Yeah.
You're doing this with homes, which I find really, really impressive to have it all on the conveyor belt, all, like one team organized and doing it, man. It's really incredible.
Well, and the cool thing, if you're wondering like, how can JWB do this, or why does it make sense to do this? You think about, out of the whole part of creating a turnkey asset for you, the part that requires the least amount of capital for the type of assets we buy is the land.
Yeah.
This was this big aha moment for us over 10 years ago. We used to be able to buy lots for $5,000, maybe $10,000. We can't do that anymore today. We have to be more selective, right? But a lot of this land that we purchased was purchased when prices were that much lower. And because of our wonderful private lending community, you all lend on a lot of these lots. I mean, on a $5,000 lot, you're paying 10% interest. That means you paid $500 to carry the cost of that lot. Right? As home values go up and up and up, as they have done over the last, 10 years plus, you start to quickly see how JWB makes money on that trade, right? We would gladly have a low holding cost on a piece of land that we can turn into an asset, because in big picture here, we're making more profit the longer we hold on to it as values go up, but our holding costs are $500, $1,000, in terms of interest costs that we have on the land.
Awesome. My friend, Robert Wiesner, who's back. Robert, haven't seen you in a while, man.
Yeah.
Happy to hear, buddy. Asking, is the average widget you will build in 2023 the same as you have built 3 years ago, or has the house changed? In other words, still general square footage, number of bad baths, other features.
Yeah. We make some changes throughout the years, just, process engineering. We're always looking at that, but nothing that's going to dramatically, change. We're still looking at those homes that are, call it, about 1,200 square feet to maybe, 15, 16, 1,700 square feet on the high end. That's where we want to be. We can be in those, workforce housing neighborhoods where you have low prices, high rents, and you want to be on that type of a home as well. You don't need to build 2,500 square foot homes. In fact, your numbers are not going to work out as well. And it'll be, it will be a more risky asset for the end client if you start to do that. So yeah, not much changes as far as the build type.
Cool. All right. And then we're just talking about capital and kind of like the raw materials, right? We mentioned the front of the factory and the capital needed for that. You got some updates here.
Yeah. So let's take a look at this too. Properties purchased in 2022, 525 properties in 2022. 2023. Do you think I forgot a digit over there or something, Pablo?
You got the niner in there.
What do you think's going on there?
I mean, I guess I look at that and it's more than I thought would go down, but I guess it's kind of what I just said, right? Right now, you proactively acquired inventory when your bulk discount was working and the Costco card was humming. And now you have that already in stock, and the majority of your resources are on the conveyor belt right now because of the combination of people outside of our own little bubble and the Wall Street sharps that's decreased in inventory. And two, those costs have also gone up. So you have already just like put yourself in a place to succeed to control the environment. So that's not where your resources are going right now in this widget manufacturing process.
I mean, we still think this is a wonderful time to buy. In fact, as you go into recessionary times, this would be the time to call it for JWB to get a better deal on land, right? Or what have you. So this does not reflect our desire to buy less just because of the market opportunity. We think this is a great time to buy, but this is a kind of a reframing of where we are as a business and the opportunity that we have created for ourselves, right? And this was a conversation we had with our team, right? Like normal businesses operate, let's just say a normal successful business, they buy enough raw material to turn widgets into things that they can sell. And maybe they hold 3-6 months, maybe a year of inventory. That's pretty high.
Yeah.
When you start to think about the raw materials that JWB has already procured, right? We have 3-4 years of inventory, even if we didn't buy any new homes right now. When we set out a while ago, we said, we think, call it around 3 years of inventory as a runway for our clients is really where we want to be. It was interesting for our team when we shared that we're only going to be buying about 90 homes this year. They were like, what does that mean? What does that mean? We're like, guys, a normal business buys enough to be able to sell, that year or less than that year. And at some point you have to wonder, like, what's the point of buying all of these materials, right? You have to understand what is the right size, what is the right amount of materials. And then if we're there, then we have an opportunity to be able to focus on different things in our business to continue to get better and better. And we don't have to try and buy 500 houses this year. And so we're really excited about this opportunity. It's still buying almost 100 houses for the year. I mean, that's kind of still a big deal, right? Still a big deal, yeah. But, this is largely going to be us being even more selective on the properties that we purchase. The ones that, of course, come to us because of our relationships. We're going to be able to, take advantage of those opportunities, but we're just in a position of strength that we just don't have to buy as much as we did back in the day. And everybody, clients, JWB is going to be benefiting from that.
Love it. Love it. The appropriate allocation of assets, man.
Yeah.
Name of the game, right? Lee's asking, is that 90 number? Are those all new properties for single family?
Yeah.
Okay. Got it. And then tell me about this private lending number, man.
Yeah. private lending, we just love our private lenders so much. Thank you to many of you who are on the call right now. Private lending for us started literally as a, something that it was between Alex, myself, my business partner, Adam, and largely our family in the beginning. And they largely began the trust with us. Few select friends, trusted us in the beginning, but it started with really just a grassroots effort. And since 2006, we've borrowed over $300 million in private lending funds. Really just so proud to say that we have returned 100% of that capital back to our clients as the payments have been made due. When it comes to principal and interest, 100% success record there. So thank you so much. All of this, what you're seeing, this activity, in large part is due to our private lending community. And last year, we raised $33 million in private lending funds. Wow. When you're looking at it here, that is, of course, a JWB world record. That's new money, by the way, that we raised. It looks a little bit like we're decreasing as you go from 2020 to 2023. But if you actually look, the goal for 2022 was 20 million.
Wow.
So our private lending team, headed up by Jamie Crawford, has done just an incredible job. 33 million is what we raised in 2022. We continue to under promise and over deliver when we set goals for ourselves too. So I wouldn't be surprised if she blows that $30 million goal out of the water in 2023. But big thank you to all of you for making, all of this activity possible.
Why do you think you overperformed on the money raising by 50% GC in 2022?
I think two things. I think track record really helps. I think, this is a thing that many clients have been investing in for over a decade, and it's been an interesting decade. And there have been some ups and downs in the stock market and things of that nature. But one thing that there have been no ups and downs in is JWB private lending. We have paid out every client principal and interest. And when you start to think about earning 10% on your money each and every year over a decade, think about how much financial strength that you've created for yourself. It's pretty rare in the investment world. So I think number one is it's that. And then I think it's your investment alternatives. People are scared right now about investing in the stock market, about investing in bonds. private lending is very similar to a bond like decision, right? It's a debt instrument. And so if you're thinking about earning next to nothing in bonds, especially last year versus earning 10% with a trusted partner, a lot of people are reallocating that money and putting it into private lending.
Awesome, man. GC, we kind of started this call with, we got 3 questions to go, but like we started this call with this idea of like the story of JWB to me is long-term thinking, right? Like the story of how you approach life. How much you think through stuff is long-term thinking. And I kind of see this story as like that hero's journey that you see in a movie. And with all the proactive pivots that you're doing right now, and these like, these ping pongs that you've been shooting that now you can do cannonballs in, and these things that you're able to ratchet up because you've thoroughly tested it and stuff, it almost feels like we're in that scene where, Rocky just finished carrying that log up the hill and playing Splash with Apollo Creed in the thing. And they're about to go face, Ivan Drago and like the fight for the big boss. Like it feels like this is like the big year that you've been preparing for a long time. Am I getting that right?
I love the Rocky reference. I wish I could go along. I don't know. I think a lot of businesses are preparing for the fight of their lives going into 2023. I don't really feel that way. I feel like this is normal. Like, we went through business planning, we prepared, we analyzed the market, we analyzed our team, we analyzed, and we produced this business plan. And for us, we are so blessed to be in a position of strength where we can flick the lever a little bit. Yeah. We don't have to bring something brand new into doing this. So no, I don't really feel like it's the Ivan Drago bout. I think it's what was one of the Rocky fights that like he just beat up on somebody in the beginning? I don't know. Maybe one of those fights.
The Hulk Hogan one? I don't know.
Whatever. I feel like this is business as usual. Hopefully that's comforting for you all. It's definitely comforting for us.
Yeah. I don't get the sense that you're surprised by anything that's happening in the economy or like the things that you have to do to react to it.
I've been through different market cycles, and we knew that things were going to change. It was one of our biggest learning lessons in 2006 through 2010 when we started to invest, and we saw the markets switch. We became very, very aware that there would be other shifts later on, and it's been a 17-year journey of preparing ourselves in advance, proactively pivoting, preparing ourselves, any of the other P's we can throw out to make sure that we are strong.
Proactively pivoting to protect your profit, puppy. You're probably
what you said.
All right, let's hammer out a couple of questions here. Dean Curry's got a doozy over here. He says he has several private money lendings with JWB currently, and he also wants to add another property. Heading into a recession, what's the better move? Keep doing private money lending or buy a new asset?
Great question, Dean. I would go back to those 3 ideas going into a recession, and let's just see how they shake out. Number 1, you're turning equities into income, right? So both of the options of either buying a turnkey rental property or investing in private lending turn equity into income. And so you're there. Next, your capital preservation. Both of them are strong when it comes to capital preservation. Turnkey rental properties have proven from a rent perspective and from a pricing perspective to be much more consistent in recessionary times and in non-recessionary times compared to the other alternatives. And private lending has been the most consistent it possibly can be with 100% track record. So you're good there. The last one is what it comes down to, beating inflation. Both of them beat inflation, but your return opportunities, your expected return on investment for a turnkey rental property is higher than what it would be for private lending. You have more upside when it comes to turnkey rental properties. And for private lending, you've got 10%. And right now on turnkey rental properties, your IRRs are roughly around, call it 14% or so. Mm-hmm. So that really matters when you're holding on for a long period of time. Now, the case for private lending would be more flexibility, right? You don't have to hold on for as long, right? It's a 3-year term for private lending. For owning a turnkey rental property, we want you to commit to buying and holding for at least a 5-year term. Yep. And if you really want to win 10 or 20, of course, you can sell at any time, but that's just setting you up for success. So I think it comes down to the equation, which is more important to you? Is it higher upside and better expected return on investment, which you would get for turnkey rental properties, or more flexibility? And if it's more flexibility, maybe you go with private lending.
There you go. Anonymous Attendee has a question. The months of inventory to price projections don't seem to be as sticky as before. At least in a few markets I am closely tracking, the prices are trending downward is faster than the inventory move and the interest rates combined. What do you think about that?
So I really love the commitment to looking at the data there. And it sounds like what this person is saying is that they're seeing months of inventory still stay, let's call it below 6, but they're seeing that pricing actually is moving downward in other parts of the country. And I'm sure that that is all very accurate. One thing that's really important is to look at the seasonality effect of pricing and also look at months of inventory and understand that if, for a moment in time, when you're just looking at the pricing, let's call it from November or December, and you're looking at the month of inventory, it's not exactly how you got to look at this data. You got to look a little bit longer than that. Seasonality happens in every market. And, from July from a year to the following January, prices decrease, I think it's about 11% or 12% on average in Jacksonville. And it's a similar number in your market. Prices always go down at the end of the year. So I would just hesitate from drawing a conclusion that months of inventory are really not kind of at least a strong indication of where prices are going. You need to look a little bit longer, especially as you're coming into spring. You're going to see what prices are going to do. And that the opposite of the negative seasonality effect comes in spring and summer for prices. So I'm going to be singing the same tune in spring and summer when, the seasonality thing plays into prices going up, which I guarantee you the media will not.
Got it. Yeah. God forbid the media puts out positive stories out there. Denny Davis asks, has the Duval permitting problem gotten better in the last year, or are you still struggling with local government issues?
Great question, Denny. Not nearly as much of a challenge on the permitting front as we were seeing earlier in 2022. A lot more resources have come to Duval County and the permitting department. But the biggest thing is that the lack of new permits going in is really significant and gives, more bandwidth for our permits to be able to push through. So not nearly as much of an issue as we saw in 2022 and in 2021.
Got it. All right, man. GC, I thought you did a great job with this, man. As a spectator and as a fan of JWB, I always love when I see consistency, right? And to me, I see consistency in a couple of different ways here. I see, number one, consistency with the advice that you're giving, this idea of turning equity into income and all these things. Your JWB seems to be making the same moves that it is telling investors to do. Two, I love the idea of, the safety of long-term thinking, the idea that the world around us and the media and all this stuff seems to be melting and, people are gearing up for this giant thing. And there's two little pockets in the universe, which is the Wall Street sharps and our little community that understand where the money is safe, right? Where you are preserving your capital, where you're beating inflation, where you're turning equities into income. And I love the transparency of it, man. I really do. I've gained so much from being able to see behind the scenes. So I love that we get to bring this to everybody else.
It's so cool that we have this platform. It is really fun to be able to share all of this with you all. I mean, it's just I feel like this is the way business was supposed to be. Yeah. Right. You all are our clients. Many of you all are our clients. We have an opportunity for you to see behind the curtain here. And, it's fun. So thank you all for giving us this platform. Thanks for coming up with this great Pablo's proactive pivot back in 3 years ago to give us this platform. Yeah, this is great. I appreciate all of you.
Love it, man. Well, I just want to thank the community, right? We have 50 plus people on this call today. Great questions, great engagement. I can't wait to see you all on February 25th. One bus worth of you all that are coming February 25th. Get to hang out, get to do a POTW live. And on Thursday, we're going to do it. The property of the week.
Week.
Wow.
You like that?
That was interesting.
Yeah I think you changed it up too.
Yeah, no, I like it.
Yeah, we'll see if that sticks.
All right, everybody. Thank you for coming. This is awesome to get to do every year. GC, thanks for putting this together.
Love it.
Last words, anything?
Just appreciate all of you. Let's hang out together for the Not Your Average Investment Tour.
Yeah. Now, if you want to succeed long-term, you got to think long-term. You got to set yourself up to proactively pivot. And who doesn't do that? People that are average. Don't be average. See you next week.